Something big is brewing in the markets, and SOFI might just be at the center of it. With geopolitical tensions cooling, economic data on deck, and options activity heating up, all eyes are on SOFI as we head into a critical trading week. If you're holding SOFI stock, or even just watching from the sidelines, this is the update you don't want to miss. Hello everyone, welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But before that, alert, this is not a financial advice video. Let's talk about SOFI and everything shaping up around it this week. I'll break down what's influencing the stock, what key economic indicators might swing the broader market, and why SOFI could be setting up for a potential breakout. Now, starting with the bigger picture, global developments are creating an optimistic backdrop for the markets. Over the past few days, we've seen encouraging signs of peace, including a temporary ceasefire between Ukraine and Russia and another between India and Pakistan. While nothing is guaranteed, just the reduction in conflict risk tends to ease investor nerves. On top of that, diplomatic talks between the United States and China have not collapsed. Both sides are still at the table. That alone gives hope for progress, or at least stability, which the markets desperately want. That sense of stability helped drive a positive end to last week's trading, despite some late-session jitters on Friday. Heading into this new week, investors are watching closely for fresh economic data, and we've got a packed calendar. On Tuesday, the Consumer Price Index CPI report drops, giving us a pulse on inflation. Then Thursday brings the Producer Price Index PPI and retail sales numbers. Add in multiple speeches from key Federal Reserve figures, including Jerome Powell himself, and it's clear this week is going to be anything but quiet. Friday wraps it all up with housing permits, starts data, and the University of Michigan's Consumer Sentiment Index. That sentiment report has, more often than not, triggered market pullbacks in the past. 4 of the last 5 reports led to declines. So yes, there's a real possibility of volatility around the back half of the week. Now, zooming in on SOFI specifically, there's one headline event worth noting. Anthony Noto, SOFI's CEO, is scheduled to speak in a fireside chat at JP Morgan's Global Tech, Media, and Communications Conference. Historically, these chats have had a slight positive effect on SOFI's stock, typically adding 1 to 2% in gains. Whether that's due to Noto's reassuring tone, subtle guidance, or investor enthusiasm is unclear, but the trend exists, and it's worth keeping in mind. Looking at short interest, things are getting interesting. Shorts returned about 2.01 million shares recently. That brings the total short interest to 13.51% of the free float, which translates to roughly 146.68 million shares. While that's still high, the good news is that it's starting to ease. The cost to borrow, essentially the interest rate to short the stock, has remained positive for 3 straight days. That suggests the intense short manipulation may be cooling off, even if slowly. We saw peak short interest around 13.85%, so this slight dip is a welcome change. It's not a dramatic reversal. No tens of millions of shares returned all at once, but the direction is clear. Shorts are starting to retreat. That shift, combined with broader market optimism, paints a cautiously bullish picture for SOFI. Speaking of market sentiment, the Fear and Greed Index currently shows we're sitting in the greed zone. That means investors are willing to take risks again, and that risk-on attitude is fueling rallies in speculative assets like cryptocurrencies, which often act as a leading indicator for equity markets. Now, if you're holding SOFI or tracking it closely, here's something to really pay attention to: options activity. Last Friday, SOFI closed above the $13 mark. That's important because it puts many call options in the money. For example, there are over 5,000 contracts at the $12.50 strike and a whopping 17,000 at the $13 strike. That means market makers may be forced to buy up around 2.3 million shares to hedge their positions, which can fuel a quick price jump early in the week. Some of that might have already been absorbed through after-hours transactions, like the 703,000 share block trade we saw on Friday night, but clearly more covering could still be coming. So if the momentum continues, Monday could open strong. Looking further into this week, it's part of the monthly options chain, so activity will likely remain elevated. Here's a quick rundown of the open interest at key strike levels. $12 strike, 12,000 contracts. $13 strike, 27,000. $13.50, 16,000. $14, 35,000. $14.50s, 18,000. $15, a massive 97,000 contracts. That's a serious amount of open interest at $15. If SOFI continues to climb, especially on the back of good macro news or bullish comments from Anthony Noto, we could see a classic gamma squeeze scenario unfold. But what would drive SOFI to those levels? Let's talk catalysts. If the U.S.-China negotiations yield any kind of deal, or even just signal no additional escalation, that alone could light a fire under the broader market. Add to that a softer-than-expected CPI or solid retail sales numbers, and you've got a recipe for a sustained rally. In that case, SOFI wouldn't just follow the wave, it might lead it. From a technical analysis perspective, SOFI has been consolidating between its 50-day and 100-day moving averages. As of now, the stock is trading around $13.18, which places it between key support at $11.87 and a resistance cluster in the mid-14. If it can break above the 100-day moving average, currently around $13.80, we could very well see a quick push towards $17. That would mimic SOFI's previous breakout pattern back in late November and early December. As of now, there are no new analyst ratings on the stock, but that could change quickly. A China deal or a shift in the macro environment could prompt analysts to reevaluate their models. If that happens, expect a wave of upgrades and price target increases, which would only add fuel to the fire. Now, a quick word to the skeptics. I'd genuinely like to hear your perspective. Beyond a worst-case scenario, like talks with China collapsing, is there any strong bearish thesis on SOFI right now? I'm not seeing one. Every major trend, from macro data to investor sentiment to technical patterns, seems to favor upside. But I'm always open to another view, especially if you see something I'm missing. To wrap this up, SOFI looks poised for a potentially exciting week. A combination of improving geopolitical conditions, a friendlier economic outlook, short covering, and a technically strong setup could all converge into something big. Whether you're bullish, bearish, or undecided, this is a week you want to watch closely. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.